Hi, let's step aside for a little and really look at the nature of a lot of crypto projects. So in this video, we're going to discuss Safemoon, we're going to discuss Olympus Dao, we're also going to discuss Strong, maybe also Thor, it's pretty much the same thing. Let's discuss how all of those projects fundamentally work, what they actually do, and how we can navigate our buying and selling so that in the end, we do not end up losing everything, right? So let's be completely real here. I think a lot of those projects, they are simply fancy ways of moving money from new investors to existing investors. And Safemoon is pretty much the clearest of those examples. If you look at Safemoon, it's a reflection token. So what does it do? When you get into the token, when you buy and when you sell, so there's different versions of this, but when you get in and when you get out of that token, you will have to pay a tax, okay? So parts of your investments directly go away and they go into some kind of pool, okay? So suddenly you've got less money, but there is money in a certain pool. Now there are existing investors and they get paid out from that pool, okay? Their return is from that pool. And so the idea in the end is that you want to be holding, you want to be one of those investors that long-term hold, and you simply want to watch more and more people buying and selling into the token so that the tax in the end pays out your returns. So that's the reflection over here. You want to be somebody that holds this longer than the average. So you want to be part of the old investor club, not part of the scared new investor club that only pays in and never gets enough out of this to at least pay for that tax. So that's one example. Then we've got, say, StrongBlock over here. StrongBlock works in a way that you have to pay 10 of those strong tokens in order to buy a node, okay? So you buy 10 strong tokens. That money goes away entirely. You get a node from this. Where are the 10 strong tokens going? Some of that money goes to the project owners, etc. 3 of those strong tokens, they go again into a community pool. So this is even a bit more dangerous than Safemoon because here all of your money directly flows out of your wallet. It's not just a tax from your investment. All of the money is gone. And so 3 strong tokens get into the pool. And then what happens is you have that node and there are other nodes out there. And each node gets roughly a bit less than that, 0.1 strong token a day. Okay, so that's how it works. Again, money is flowing from new entrants to existing investors. And you want to be the person that's an existing investor and that comes early enough so that your initial 10 strong tokens will be recouped with this 0.1. And you're hoping that the price of the strong token doesn't collapse in the meantime, right? It doesn't go down so much that your initial US dollar investment here doesn't get recouped by this 0.1 strong tokens that you get every single day. Now, Olympus Dao works slightly differently. It's a bit more complex, but basically what's happening over here is you come in, you deposit your money, your hard-earned stablecoin cash, and you put this in a treasury. Now, that treasury itself doesn't pay out these stablecoins anymore. It pays out Ohm tokens, okay? So these are just created out of thin air. The treasury, it gets more and more money in it. And so in the end, you can say, okay, these Ohm tokens that were issued over here, they are backed by the money in the treasury. Now, in the end, money never really flows out of the treasury unless the project owners decide to do so. So are these tokens really backed? That's a pretty hard question. You're hoping for the utility of those tokens to kind of reflect what's in the treasury. But there's no real mechanism that says that you can burn your Ohm token to get these dollars back. The price of your Ohm is pretty much independent of whatever's in the treasury. The price of your Ohm is just dependent on what people are willing to pay for it. Now, why would you do this kind of a transaction? And in the end, these Ohm tokens, they tend to be more expensive than even what's here in the treasury. Why would you do such kind of a transaction? That's because when you stake this Ohm, when you give this Ohm back again and you put it in some kind of a pool, that pool gets sliced into smaller and smaller pieces. So at the beginning, you've got maybe 1 Ohm token, then you wait for a while. I think for Olympus Dao, it's around 1.5 to 2 months or so. Then you will have 2 Ohm tokens back. So that sounds like, okay, you're getting a quite nice ROI. But what's actually happening is this pool over here, it simply gets split in smaller and smaller pieces. There's no new money coming in here, right? If you just pretend you're the only investor over here and you go through all of this, you will still get more and more Ohm tokens. It's simply a dilution of the underlying token. And so what happens is people go through this process, more and more Ohm is created. There's a lot of inflation, a lot of dilution happening around the Ohm token. And suddenly, when there isn't more money flowing in here, when it's only more and more Ohm token being printed, then we will have a situation of supply outgrowing demand by a lot, right? So for this price, for this Ohm price to stay stable, we need to have a continuously growing investor base, because the supply, it is continuously growing. If the investor base, if the demand does not grow, then the price goes down. Supply higher than demand. Now, how can we navigate this? Should we ever invest in any of this? But if you should invest in this, it's obviously dependent on many things besides morals and ethics. Obviously, it also depends on your risk tolerance. Now, what you might have noticed in describing all 3 of those projects is there seems to be some kind of inherent lag built into them. So let's keep it the simplest. Let's look at this reflection token, right? The Safemoon. You have your initial investment and you get taxed. Money goes out of this. And then at the very beginning, you're just one of the new investors that's directly here in the losses. The tax is your direct loss. And so you have to hold it. You have to hold it until enough people have come in and out of the coin that have generated enough of that tax to then pay you and to make up for that loss. So when you look at this on a time scale, right, you start out with, say, $100, and then you pay the tax. You go down to, I don't know what the tax on Safemoon is. Let's say it's 10%. And then you have to wait and wait and wait until the other participants, they come in and out and they pay their tax. And then you hopefully wait for long enough that you will then be in the profits, and that you can then sell for, say, 110 or whatever your target is. And this point over here is basically the average holding duration. So you always have some kind of a lag over here. This is kind of like your buffer zone. And the same is true for the other projects, right? For StrongBlock, you've got your 10 strong that you pay out. You get 0.1 strong every day. So you wait 100 days. So that buffer zone is 100 days for strong. And the same is true for Olympus Dao. There you're simply hoping that you're the first person to sell. So what's happening is these systems, they need an ever-growing demand, right? And the demand can't increase instantly, right? It needs some time to grow. And so what you're doing is, by creating these buffer zones, by creating this time where you need to lock in your investment to just recoup your losses, you're artificially, for a certain period of time, restricting the supply, right? This is classic economics 101. So price, demand, supply. You attract people by telling you will get more tokens over time. You will grow your Ohm tokens. You will grow your Safemoon. You will grow your strong tokens. So this supply here, it has to go up at some point in time, right? This here has to shift to this side, depressing the price. But that's a problem, right? When you directly pay out all of this and the price is going down, who's going to buy into this, right? You will just see a chart that looks like that, right? Nobody wants to buy into this. And so you want to have some kind of a buffer where the price is at least stable and where people say, oh, okay, I get more and more tokens and the price looks pretty stable. So this seems to be a good investment. And how is this achieved? Through this buffer mechanism, right? Through locking in the investment for at least 3 months for StrongBlock or a certain period of time for Safemoon, etc. So you're artificially keeping the supply at the current level for 3 months. People talk about it. People talk, oh, you can get really nice returns on this, which will create demand. The demand will increase and thus the price increases, or at least doesn't fall. So the price here goes up. We see a nice little chart of a price increasing or being at least stable. And so the story develops. People get excited. You get both return on this as well as an increasing token price. And this is exactly now where the timing here comes into play. Here, let's look at Olympus Dao. We had this, right? We had a pretty stable price, sometimes even an increasing price. and all is nice and rosy, and then comes the final crash. And why does this crash happen? It's because a lot of people that bought in over here, they are now beyond their buffer zone price, right? It's the same here for Strong. People buy. Then at some period of time after in StrongBlock 3 to 4 months, they've got recouped their investment and they get out. They put at least some of their money out of the system. So make sure they're at least somewhat risk off. And that's then after this buffer period is over, that's when the supply grows, which will then depress the price. So the question is always, is the buffer zone long enough for demand to grow quickly enough to keep the price stable? If the demand slows down, or if the buffer here isn't long enough, then the price will crash. And so the way to solve this is when you look at StrongBlock, for example, when you look, for example, here at the relatively similar project, at least in terms of tokenomics. Not everything is the same here, but when you look at Thor financials, this gets very often compared to StrongBlock. We see they are now reducing the daily payouts per node. So why do they do this? Because the Thor token is simply tanking. So there are now a lot of people that generate all of these Thor tokens. The supply is getting really, really high, and it doesn't outweigh the demand anymore. The inflation is taking over. And so in order to turn this around, they are reducing the inflation by paying out less per node. Now, the issue here is we've already got a negative trend here, right? And this is the question, can new demand pick up when the trend already looks bearish? Sometimes it can work, right? We saw this here in the past. Thor made a phenomenal turnaround, but that's definitely not the usual case. Most of the time, these assets, they simply stay depressed. They simply keep falling. If you look at the different Ohm forks over here, when you check the price development of most of those Olympus Dao forks, it's the same thing as what happened here with this node fork. So simply be aware of this, right? Whenever you invest into any of this, try to find out how long is this buffer period, how much money was flowing into the system at a certain particular point in time, right? So maybe you can time this somewhat, look at trading volume, and then see how long do you on average take to recoup your money. And maybe then you can time to a certain degree when this whole system might crash and burn down. I can imagine not everybody agrees with what I've said here in this video, so please feel free to give some feedback. I'm more than open for a discussion. Would be great to know your thoughts. If you enjoyed this video, you might also enjoy the premium content to be found at thebitcoinstrategy.com. Link is also in the video description. And of course, if you haven't yet subscribed, feel free to do so as well. We've also got a public Telegram channel. Simply search for Bitcoin Strategy channel within the Telegram app. See you next time. Bye-bye.